How do you feel? According to well-known Tesla bull Cathie Wood, most analysts predict a significant rise in the price of Tesla shares in the stock market at the start of 2023. When interest rates decline in response to inflation, this fact will ultimately triumph, as stated by Cathie Wood. While some investors are concerned that the United States may experience a recession by 2023, Cathie Wood, the founder of ARK Investment Management, believes one has already occurred and may end in 2023. Many economists and strategists, on the other hand, reject the idea that the United States is currently experiencing a recession and predict that it may occur next year. In fact, Wood believes the country will emerge from it in 2023. Cathie Wood predicted that the US was already experiencing a recession in late June. In an interview with CNBC, CEO of ARK Invest Cathie Wood acknowledged that she had misjudged the level of inflation and went on to say that the US economy is probably already in a recession. She attributed the escalation of inflationary pressures beyond her predictions to supply chain disruptions and geopolitical factors like the conflict in Ukraine. She added that by mid-2022, a recession partially caused by improper inventory management had already started. Wood stated that although the United States is currently experiencing a sizable inventory recession, it will not resemble the systemic recession and financial crisis of 2008-2009. Rather, will be more of a garden kind. She then outlined a roadmap for innovation, saying, I think that what we saw in the aftermath of COVID will be repeated during, but not just for a 1-year period for the next 5 to 10 years, stating that the US is now in a period like no other in history. Would explain that this is from data put together by ARK Invest chief futurist Brett Winton after consulting academics in academic research. These were the true disruptive innovations throughout history. Wood pointed out that there's only one other time before today that the US has seen multiple innovation platforms evolve at the same time. According to Cathie Wood, it was during the early 1900s when the telephone, electricity, and the automobile transformed the world. Wood took it a bit further and said that the US is now in a period like it was back then. At the time, there was a pandemic, the Spanish flu and World War I. Those are arguably similar to what we have experienced in the past year with the global COVID-19 pandemic, as well as the Russia-Ukraine war. However, those problems were notably much worse than our problems today. Still, even during those tough times, innovation took off, and the US ended up with inflation peaking at 24% in June of 1920 and dropping within 1 year to negative 15% in June of 1921. Having been through a very tough period, we ended up in what was called back then the Roaring 20s. It was a great time for the stock market. It was a great time for investments of all kinds because inflation and interest rates were coming down. Said would then continue to say that today there are 5 innovation platforms evolving at the same time in the US. This has never happened in history, and the seeds for all of them were planted during the 20 years that ended in the tech and telecom bubble. The tech and telecom bubble is the first time a lot of investors heard this concept of exponential growth, and they bought into the dream. But the problem was back then the technologies weren't ready. And if they weren't anywhere near ready, the costs were way too high. Shared Wood went on to say that the cloud wasn't invented until 2006 with HS, and that the major advances in artificial intelligence through deep learning weren't made until 2012. Regarding DNA sequencing, the first whole genome sequenced in 2003 cost $2.7 billion and required 13 years of computing power. Even if the cost had dropped by 75 the following year, it would still have been too expensive in light of the fact that we have gone from $2.7 billion to $500 today in a few hours of computing power. In fact, 2 companies, Illumina and Altima, claim that it is very possible for it to reach 100 or 200 by the following year. Therefore, we believe we are ready for prime time now, that the technologies are ready and the costs are low. Enough says Wood. What are these platforms that Cathie Woods is describing as evolving simultaneously today? Firstly, DNA sequencing, which is now known as multi-mix sequencing because it encompasses methylation, RNA, and proteins in addition to DNA sequencing. It's a complex but exciting field that holds the promise of curing disease. In fact, we've already had one major breakthrough in the last week alone, said Wood. Another innovation she would call robotics states that while industrial robot costs are falling sharply, there is a labor shortage. Problems are solved via innovation. According to Cathie Wood, consumer preferences are turning toward innovation, and the demand for robots is currently surging. Wood also mentioned energy storage as an innovation, noting that it It's not merely a reaction to the Russia. We're trying to look as far into the future as we can, and we're seeing breakthroughs that we expected in 5 or 10 years happening within 6 months, once a year now. Another reason why oil prices increased was the conflict in Ukraine. In addition, these newer, more environmentally friendly cars also contributed to the increase in oil prices. Of the 5 simultaneously evolving innovations that Cathie Wood discussed today, 3 are related to Tesla. The final evolving innovation that Cathie Wood discussed is the ChatGPT, a computer program that OpenAI launched in November 2022. It is built on top of OpenAI's GPT 3.5 family of large language models and is optimized with both supervised and reinforcement learning techniques. Considering robotics, artificial intelligence, and energy storage, many people are positive about the company's future. Early in January, Tesla is anticipated to announce record quarterly deliveries, but given the company's struggles with inflation, that may not be enough to appease investors. Growing interest rates hinder China's output, and worries about declining demand in an attempt to reduce inventory deliveries are one of the most closely watched metrics by investors eager to see if Tesla can maintain its rapid growth. Tesla offered a rare 7,500 discount to customers in the United States who took delivery of a new Model 3 or Model I at the end of the year, along with 10 0 miles of free supercharging. The Inflation Reduction Act, or IRA, will restore up to 7,500 in federal tax credits for certain EVs starting January 1st. According to a Bloomberg survey of 16 analysts, Global Fourth, quarter auto deliveries might reach 42,760 units. This estimate, which excludes some of the most recent analyst estimates, surpasses the record 343,830 units delivered in the third quarter. As the leading global seller of electric vehicles, Tesla is well positioned to benefit from some of the IRA's tax credits for battery cell manufacturing and locally assembled EVs. However, to meet its target of growing deliveries by 50 annually over a number of years, an objective that Tesla warned it would not reach, Tesla will probably have to make concessions regarding gross margins in 2022. In China, Tesla has slashed pricing across the board and announced planned maintenance at its Shanghai facility. According to 24 major brokers, Wall Street is forecasting little less than 420 units for the final quarter of 2022. Delivery estimates have been declining over the past few weeks. Fourth quarter estimates peaked at approximately 450 units in the summer. As December approaches, the consensus estimate for the quarter was approximately 430 units, according to FactSet, a financial data company that lists over 40 analysts covering Tesla's. A figure of about 420 should be sufficient for investors when delivery results exceed expectations. In addition, analysts anticipate that Tesla deliveries will by approximately 40 in 2023, reaching 1.8 million to 1.9 million cars, up from roughly 1.3 million in 2022. Meeting these delivery estimates will help persuade investors that the 2023 earnings estimate is reasonable and that Tesla stock may have sold off a bit too much in the previous year. For now, it's too early to tell how 2023 will turn out for Tesla stock, so make sure to subscribe to this channel for more. Tesla shares typically perform well in the interim between delivery results and when full quarterly results are reported a few weeks later.